Before you write off Constellation Brands as just another beverage company, listen up. At Insightful Value, we dig beyond the surface and dive deep into companies the market might be underestimating. And right now, Constellation's stock price is swirling near the bottom of its recent range. But is that a warning sign or an opportunity to raise a glass? This video is for informational and educational purposes only. It's not financial advice. Make sure to like this video, subscribe to our channel, and let's break it down. Constellation Brands is one of the largest alcohol beverage companies in the world, best known for iconic names like Corona, Modelo, Pacifico, Svedka, and Meiomi. They operate in three major segments: beer, wine, and spirits. But make no mistake, beer is the heavy lifter here, especially the Mexican imports that have surged in popularity across the U.S. The company's partnership with Grupo Modelo for U.S. distribution rights to brands like Modelo Especial has been a game changer, especially in recent years, as Modelo overtook Bud Light as the top-selling beer in America. But despite the strong brand portfolio, the stock has been under pressure lately. Why? Some recent earnings came in a bit lighter than expected. Wine and spirit sales have been declining as consumer trends shift, and there's concern around the valuation given ongoing macro uncertainty. In the latest quarter, Constellation posted net sales of around $2.1 billion and earnings per share of $1.20, beating analyst estimates. But cautious guidance and pressure on margins kept the stock from bouncing. Operating margins have hovered around 30% in the beer business, but have been lower overall due to softness in the wine and spirits segment. Still, from a value investing standpoint, there are things to like. The company generates strong free cash flow, has reduced debt in recent quarters, and maintains a disciplined capital allocation strategy. They've also been actively buying back shares and paying dividends. Speaking of dividends, Constellation's dividend yield is modest at around 1.5%, but it has shown steady growth over the past several years, backed by consistent cash flow. Looking ahead, management is banking on the continued dominance of Mexican beers, premiumization trends in alcohol, and operational streamlining to drive future growth. They're also winding down their exposure to Canopy Growth, a cannabis investment that weighed on results in the past. So why consider this stock now? It's trading at a lower multiple compared to its historical average, despite continued dominance in the U.S. beer segment. That makes it worth watching from a value angle. But it's not without risk. Margin compression, shifting consumer preferences, and competition in the alcohol space could keep growth in check. Also, the wine and spirits segment continues to be a drag. At Insightful Value, we focus on companies just like this. Solid fundamentals, iconic products, but temporarily out of favor. We break down the data and strip out the fluff so you can understand the real story. Whether you're a seasoned investor or just dipping your toe into value stocks, Insightful Value brings clarity to complexity. For more insights into undervalued opportunities like Constellation Brands, head over to insightfulvalue.com. And don't forget, subscribe, like, and hit the bell so you never miss a new breakdown.